So I think the macro environment says I got to find an inflation hedge. The political environment on one hand is a massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets and we're going to embrace this. And I think a massive advertisement for Bitcoin with the Ukrainian-Russian war, and especially the sanctions, where we seize $300 billion worth of treasury assets from the Russians. I think the Chinese have $3 trillion worth of assets, and that might have got their attention. And probably pretty much the conclusion is, if you're any nation state in the world and you think you might ever be in conflict with another nation state, and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. So I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, A, and I don't trust my assets to not be seized, B, what am I going to do? And then right in the middle of that, you see things like Bitcoin poking their head up saying, check me out.
The mood across the cryptocurrency market has seen a notable improvement in the last week as prices are on the rise, with Bitcoin now trading near $48,000 and Ether attempting to hold above $3,400. Although the price of Bitcoin has been oscillating around $48,000 since it broke out above $45,000 early on March 28th, bulls are now debating whether a bull run to $80,000 is on the cards. Let's hear Michael Saylor's take on the subject. Hello and welcome to Money Talks. In today's video, billionaire Bitcoin bull Michael Saylor updates about inflation, Bitcoin's role in the Russia-Ukraine war, and cryptocurrency adoption around the world. Saylor also speaks exclusively about MicroStrategy's most recent $205 million allocation into the Bitcoin space. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
You're a rational investor. You have to stampede to property. And now the debate is just what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto? Have you invented coal fusion, in the next Tesla? And are you going to buy that? And so that's the investor attitude. I don't see there's no political conviction or will or any likelihood that we're going to stop the expansion of the money supply. I mean, no one's expecting that. No one's even talking about that. So that being the case, I think your real choice is just, do you want to be long property? Which property? And of course, my attitude would be you should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like negative 15% real yield, but I even more like to be short the peso, which is probably a negative 35% real yield. So you want to be short a weak fiat currency via debt. And then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country. How valuable is $1 billion of real estate in Moscow right now, right, to anybody in the Western European region? It seems to me that it's pretty obvious there's $100 trillion worth of monetary energy or wealth that would be better served to be sitting in a synthetic digital asset like Bitcoin than to be sitting in real estate or gold or equities that are currency derivatives or other kinds of weak currencies. So you got 100x opportunity or addressable market from here even without considering inflation. By the time we get there, it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it if you look at it weighted. If you look at it from a time point of view, if you're an institutional investor, the first 10 years of a crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it wasn't going to be hacked, banned, broken, copied. And so I think 10 years later, it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy, bought $250 million of Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years, what happens at the end of year 1, well, Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles about now. There's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the SEC, the FDIC. The executive order from the White House last week was a massive milestone. Biden's election was a massive milestone, but the executive order was a double massive milestone because that directed 18 agencies to figure this out. That'll be 24 months. By the end of the first Biden administration, I think we have 80% of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out. And by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry, 2030 to 2040. But right now we're in hyper growth, early stage, lots of questions, lots of people don't understand it. But I love that part because I think this is the stage. It's like 2011 Google stock or 2011 Amazon or Apple or Facebook. Just at the stage where it's kind of unstoppable. It's necessary. A reasonable objective person would say Google, Amazon, Apple, Facebook, they were all useful and necessary in the year 2012. And yet only, 95% of the people were underallocated. And then those things worked for the next 8 to 10 years. And then by the year 2021, every 21-year-old Uber driver, if you asked them, would have said, oh yeah, I own Facebook stock or I own Amazon stock, or they get in debates about whether Google's better than, Apple, and it's not really it's not that high growth stage anymore. It's that maturing dominant monopoly stage where now you're just tied into the greater growth of the techno economy.
MicroStrategy's CEO Michael Saylor also doubled down on his Bitcoin bet as the price of the digital asset continued to trend positive for the year. MacroStrategy, a subsidiary of MicroStrategy, took out a $200 million Bitcoin collateralized loan, putting up $820 million of Bitcoin up as collateral. Saylor has effectively turned MicroStrategy shares into a leveraged play on Bitcoin. It owns about $5.9 billion of the cryptocurrency, based on the most recent price of around $47,500.
A family can do this, a company can do this, a municipality can do this, and a government and nation state can do this. Everybody can apply this leverage. For MicroStrategy, we started with 250 million of investable capital, and we put it into Bitcoin about 18 months ago, and we have parlayed that into about $6 billion of capital in 18 months, from 250 million through a series of a Dutch auction, equity offerings, convert offerings, debt offerings, and just today we did a asset-backed loan, and that's what we announced today. So from our point of view, what we took a stock that was the bottom at $90 a share. It was 120 when we started this journey, and we've driven it up by a factor of 4 or more, and we created billions and billions of dollars of shareholder value. What's the lever? The lever is Bitcoin is the only scarcity in the universe. It's capped at 21 million coins. 1,000 years from now, there's every reason to believe there's 21 million of these things. And if you compare that to gold or silver or oil or natural gas or soybeans or land or cotton or whatever you want to call a commodity, they're all being produced per demand as the price goes up, and Bitcoin isn't. So the leverage here is you short the currencies. You basically borrow $1 billion at 2 or 3% or 1% interest. And you borrow that because the currency is losing 15% or 20% of its value a year. So when you grab $1 billion that's got a negative real yield of 15%, you already got $150 million a year benefit there. Then you flip it into a hard asset. I'm not going to call it a currency, because to be a currency, you have to be able to transfer it every day with no tax event. So you convert it from a weak currency to a hard property. Buy $1 billion of property, and if the property is getting more valuable and more in demand, then, and Bitcoin's going up 100% a year on average for 12 years. So we're basically, we're trading something that costs 3% money for something that yields 100%, or something that's got a negative real yield of 15% for something with a positive real yield of 100%. You're arbitraging the difference. So we've done that every which way, and it's worked well for us, and it's worked well for our shareholders. Our stock is like a currency of a nation state.
According to Michael Saylor, financial markets are unprepared for Bitcoin-backed bonds. Saylor, who is the most vocal advocate of companies adding the currency to their balance sheet, said that, "I'd love to see a day where people eventually sell Bitcoin-backed bonds like mortgage-backed securities. But the market is not quite ready for that right now. The next best idea was a term loan from a major bank. That may serve as a warning to El Salvador, which is planning to sell about $1 billion of so-called volcano bonds that will be backed by Bitcoin." While the proposed offering has been the talk of the crypto industry since it was first proposed last year, the nation's Bitcoin advocating president, Nayib Bukele, has delayed offering the securities. Saylor also said that the $205 million loan, which will be backed by MicroStrategy's Bitcoin holdings, was the best possible course for the shareholders after exploring a slew of financial options. They included issuing Bitcoin-backed bonds, tapping DeFi or decentralized finance tools, and loaning out its stash of digital assets. So what are your thoughts about Michael Saylor's Bitcoin bet? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.